LLCs are the most popular entity type for small business owners. But have you ever wondered what the actual benefits of owning an LLC are? How does it legally protect you? And more importantly, what are the tax benefits of owning an LLC? Knowing the answers to these questions will definitely help you decide what entity is best for your business and, of course, how much you'll end up paying the IRS. Hey there, Crystal A, CPA here, and in today's episode, I'm going to break down the tax benefits of LLCs. All right, first, let's address what's probably most important to you, and that is the tax strategies associated with LLCs. Understand this, LLCs in and of itself is not a tax strategy. In fact, LLCs have very little to do with your taxes in general. LLCs are actually legal entities that protect you from personal liability in the event of a lawsuit against your business. From a tax perspective, an LLC is either viewed as a sole proprietorship or partnership by default. In both cases, there is not a tax difference between the two. However, when compared to other entity types, there are ways that you can benefit from owning an LLC. Let's dig a little deeper. The first tax benefit is pass-through taxation. When thinking about how your business will be taxed, there are two types of taxation methods to be aware of, and that is pass-through taxation and double taxation. Pass-through taxation means that all of the profit your business earns is subject to taxation and is passed to you as the owner, where you'll pay taxes based on your individual tax rate. With pass-through taxation, it doesn't matter if you did or did not pay yourself from your business. You will be taxed on all of the profits of your business. Double taxation means that technically you are taxed twice on the same income. First, your business is taxed on its income, and then secondly, you are taxed on the income you take out of the business. So with that being said, a major tax benefit of LLCs is that it is only taxed once through pass-through taxation. Let's take a look at an example of what I'm talking about here. Let's assume you made $100,000 as an LLC owner. If your tax rate is 25%, then you would pay about $25,000 in taxes as an LLC. However, on the other hand, let's say you're a C corporation, which is an entity that is double taxed. If you made $100,000 as a C corporation, your business would be taxed on that income first. With a corporate tax rate of 21%, then you would pay $21,000 in corporate taxes. But then you would have to pay taxes on what you pay yourself from the corporation. So if you pay yourself $50,000 in wages and this puts you in the 25% tax bracket, this would mean you would have to pay an additional $12,500 in taxes. So in total, as a C corporation owner, you would pay $33,500 in taxes, whereas in an LLC, you would only pay $25,000 in taxes. Now keep in mind that this is an oversimplified example and there are other considerations like self-employment tax. But in general, this is an example of the difference between pass-through taxation and double taxation. And as we can see, an LLC with pass-through taxation is a tax benefit compared to a C corporation, which is double tax. The second tax benefit of an LLC is the S corporation election. As an LLC owner, you have the option to elect your LLC to be taxed as an S corporation. S corporations are tax beneficial because you don't have to pay self-employment taxes on all of your business income. But with an S corp election, you are supposed to pay yourself what's called a reasonable salary and receive a W-2 from your business for the work you perform. Now, with receiving a W-2 wage, you will pay about the same amount of what you'd pay in self-employment taxes. But, and here's where the tax benefit comes to play, if your business earns over your reasonable salary, the amount above your salary would not be subject to self-employment taxes and would only be subject to federal and state taxes. Without the S Corp election, all of your business profits would be subject to self-employment taxes, but when you own an LLC, it gives you the flexibility to choose to be taxed as an S Corp and save on those self-employment taxes. All right, so the third tax benefit of LLCs is write-offs. This is a major benefit for self-employed individuals who may not be writing off things related to their business, like your home office expenses, business travel, and other related business expenses. A key distinguishing factor with owning an LLC compared to a sole proprietorship or partnership is that as an LLC owner, you are considered legally separate from your business, which means that your business finances should be separate from your individual finances. And by doing this, it makes it easier for you to keep track of your business expenses and write them off on your tax return. For example, if you have a business bank account, you can sync your financial information with a bookkeeping platform like QuickBooks, for example. Then you can categorize all of your business transactions so you can easily start deducting eligible expenses from your tax return. The fourth tax benefit of owning an LLC is pass-through deductions. LLCs are eligible for the 20% pass-through tax deduction that was passed through the Jobs Act. Pass-through owners who qualify can deduct up to 20% of their taxable income from their taxes. So for example, if you were preparing to file a tax return that would report $100,000 in income, then this deduction would reduce your taxable income to $80,000 or 20% less. This would reduce your tax bill by thousands of dollars. There are a few rules and requirements for this tax benefit, but it could result in some serious tax savings for you if you're eligible. The fifth and final LLC tax benefit is that LLCs are easy to set up. One of the best things about LLCs, especially for new or busy entrepreneurs, is that they are easy to set up. You don't have to worry about things like common or preferred stock, and there are less compliance requirements for maintaining your LLC. So if you don't have a lot of things going on in your business, starting with an LLC might be a great option for you. Okay, so those are the major tax benefits of an LLC. To recap, the tax benefits of an LLC are pass-through taxation, S Corp election, business tax write-offs, pass-through tax deductions, and ease of setting up. All right, I hope you enjoyed this video. If you did, please go ahead and give this video a thumbs up or comment below with any questions you have. Also, don't forget to subscribe to our channel so you don't miss out on more helpful tax and business information. And I'll see you in another video.